Yo, what's going on, guys? Super excited to be here with you guys for another YouTube video. When it comes down to this video, we've been getting a lot of questions from people that want to learn about the fibs. So what I want to do is I want to take a few moments to share our knowledge when it comes down to fibs, right? So what we're going to do is we're going to go ahead and hop on the charts. We'll go over how we kind of use fibs, how we incorporate them, how we apply them to the strategy, and I'll give you some history about the fib stuff as well, right? So what we're going to do is we're going to go ahead and pull up the charts and let's get into it. So when it comes down to the Fibonacci tool or the Fibonacci retracement tool, the biggest question we get is what are the settings? So real quickly, I'm just going to get that out of the way very fast, right? Here's the settings. You guys, I'm putting it on this side actually. Here are the settings. Feel free to pause the video. Go ahead and take some notes when it comes down to the settings. There's only a few rules when it comes down to fibs. So what we're going to do is we're going to type out our fib rules. So we're going to have our fib rules over here. When it comes down to the rules, what we want to do is just break them down really simply. One is use fibs in a trending market, right? So that's number one. Cool. So we only want to use fibs in a trending market. What does that mean? Let's draw out a market condition. Let's just say our market looks like this, right? First rule says to what? Only use fibs in a trending market, right? Trending market. What do we know? It's 3 market types / conditions. We got an uptrend, a downtrend, and then a sideways market, right? So really quickly, it says only use fibs in a trending market. Cool. So we have these 3 market conditions. What do we have? We have an uptrend, we have a downtrend, and then we have a sideways market. Which one of these is different? You guessed it. It's the sideways market. You don't use fibs in a sideways market. You only use them in an uptrend or a downtrend. So what does that mean? It means once you identified what direction the market's going in, what you can do is really start factoring in what are the key points in price, right? Where are the key points in price? The key area in price is the last higher low that put in the new highest high point. That is your key structural range when it comes down to price, right? That's going to be like the key levels that you guys use when it comes down to understanding, hey, from this zone to this zone, what am I doing? Because when it comes down to what you got to understand is that there's a point in price that starts the move that breaks the structure up, right? Or breaks the structure down depending on if you're in an uptrend or downtrend. But in regards to it, you got to understand that this low is the cause for this move up, which also made a continuation break of structure, right? Sorry for this little ugly arrow, but this is the high that creates a continuation break of structure, right? So when it comes down to it, in a trending market, all you have to do is in an uptrend, you're going to take the market from a higher low to a higher high, right? And I'm just going to delete this stuff and get it out of the way so we can zoom in and focus in on what's good, right? Now, what you have to think is this is the start of your move, right? So right here, whoops, this right here, this is the start of your move. This area here is the start of your move, right? So what you got to think about is if this is the start of the move and price goes up, what we have to factor in is once we start seeing signs that the market is showing us a reversal or starts pulling back, we can say that this is the finish line, right? We have the start and the finish line, right? Now, what price has to do is it can't just go up for forever and ever and ever and ever. It has to make some level of retracement, right? To get an entry and then go higher. So when it comes down to it, what we like to do is we like to understand premiums and discounts, right? So what I'm going to do is I'm just going to take another tool from the high to the low. And all I want you guys to understand is this is just understanding. This is supply. This is demand. Oh, whoops. This is supply and this is demand. You don't got to be a genius to make money, right? This is supply, this is demand, and where they meet in the middle is equilibrium. When it comes down to a market pulling back, what you have to factor in is a Fibonacci retracement tool its only design is to just tell you a potential area of where price can pull back to before it continues the move higher and breaks structure to the upside, right? That's all it's designed to do. So what you got to factor in is this is just based off of the basic principles of supply and demand. This is what we call premium pricing. This is what we call discount pricing. So premiums and discounts. When it comes down to it, you want to buy in discounted prices. So you want to buy anywhere below the 50%, which is a discount, right? You want to buy the discount, right? So already you should know that, hey, if I'm waiting for this market to pull back and retrace, I'm already looking to, let's say, buy in this box here, right? I'm already looking to buy in this box. Let's do this real quick. Structural range. You should just know that, hey, I'm looking to buy somewhere in this box here, right? Now that we're going to be looking to buy in this box here, that's a pretty broad area, right? This is a big area. The distance from here to here is huge. This is a big zone to try to pinpoint down to, right? Don't worry about the pips right now in that example, but this is a big, broad zone, right? So what we want to do is we want to refine it. And that's what we use the 61, 71, 78.6, and 88.6 with. And we can call this more, let's just say this is like a golden zone. So now we have this zone. Now we can factor in some market geometry, right? Measured moves. When it comes down to measured moves, guys, this is just very simple. If this first leg in the market is about this big, maybe the next impulsive leg is also going to be roughly around the same size. Might not be perfect, but might be roughly the same size. And then maybe the next one will also roughly be the same size, right? From there to there, whatever you want to say. And then, what also happens is we have a pullback. Let's say the pullback is roughly this size, right? Look at the next pullback. Same thing, roughly the same size. So what we could factor in is that the next pullback could also be roughly the same size. So now we start fine-tuning our zone of area of interest a little bit more. Okay, maybe let's focus in down here. Let's focus in on the 71, 78.6, 88.6, whatever it is that we're marking up. Maybe we focus in on this level. If price retraced from here last time and it retraced from here last time, more than likely it'll probably do it the same. And then you start adding more confluences. Maybe there's an institutional candle here that lines up with this as well. A sponsorship candle. Maybe there's something in this zone here that lines up to your overall confluences, and then so on and so forth. And if this last move was roughly this big, maybe the next move will be similar, right? Now, just to break that down into an even simpler way, on a perfect market, if the last move was roughly this big, 9 times out of 10, the pullback will be about this big. If you catch the entry on the pullback and the market's still trending in your favor, potentially however big this last move was, you can catch another one like this, right? So when you're incorporating fibs into it, what you really have to understand is if this is the start and if this is the finish of this move, so start to finish, start here, finish there, in regards to it, what we want to just factor in is that if this is the start to the finish line, all the fib is designed to do is tell you the potential area of where price will bounce. And then you're going to add multiple confluences to that area. And then you can always target these weak highs. And then what you got to understand is that if the market actually gets up there and it breaks through that, it should extend just a little bit farther, right? And that's called a de-extension level. So negative 27 is a good de-extension level, and the negative 61.8 is a good de-extension level. So when it comes down to the fibs, you're going to use this zone down here to focus in on to find an entry, and then you're going to look left and trade. What does that mean? It means you're going to look left You're going to look what happened here in this range in price, and then you're going to trade to the right. When the market comes up to that area, if it makes sense, scale in and then start swinging it. So what I want you guys to factor in is when you're trading with the fib, all you want to do is just focus in on those levels and then start applying it to real charts, right? Let's talk about some trades that we're actively in. Let's do my pairs. We'll talk about gold, right? So we actually just took a gold buy, and we'll drop the Discord somewhere on the screen of the premium chat where we talked about this trade. You can get a part of the premium Discord server, and then in the premium, you can actually start looking at the opportunities and the ideas and the trades that we're taking. But in regards to it, we have one higher time frame move to the upside, right? And overall, we know that gold has been super, super, super bullish. So we're in a bullish market. We've had a lower time frame break structure, but if we're looking at it from the higher time frame, gold is very bullish. It's been very bullish. This is the first time we've gotten a real solid pullback that we needed, but we're going very bullish. Higher time frame. There's a lot of good areas up in here, imbalances. There's candles that need to be getting mitigated. There's equal highs in different areas. There are, let me see, where's this tool at? Perfect. There's a imbalance zone up in here, so on and so forth. So we have some upside targets. We have a reason to understand that price just made a move like this big red move. We've seen that price has made this move. Let's change the settings on this to changing pips. So we've seen that we've made this nice big move. We're up like 90 to 100 pips, depending on your entry. We'd given out a zone in the Discord. But when it comes down to it, there's so many confluences, right? But here's the thing. All right, let's just say price was here, coming back to the fib. Let's just say price is here. We think this is the high. Maybe price starts retracing a little bit. We start getting indications that it is. Perfect. First thing we want to do is understand where our premiums and discounts are at. Remember, guys, the fib is just telling you what's good. Okay, here's the equilibrium. It got hit. It's all good. Don't worry. We have a refined zone here, right? We have this refined zone here. Do this. So anything below the 50 is discount. Anything above is premiums. We have this zone here of the 61 to 88.6. And then we keep factoring it in. We have our order block. We have our order block there, right? When we scale into the lower time frame, it's a much bigger area, right? So we start building our little zone. And then obviously this is a higher time frame area. I'm not going to give all the steal away in this video, but we can go to the lower time frames and find a better entry. But just for the sake of the video, there's the entry. And then we're trying to potentially swing it up into here. Notice how many things line up. We have the imbalance from over here. We have that higher time frame 4-hour imbalance. We got the negative 27 on the fib. And then potentially we have our measured move. Price makes a retracement. We have a measured move. That kind of lines up with that same area. So now what we're doing is we're building ourselves a roadmap, right? And while we're building ourselves a roadmap, we're just seeing what the lower time frame is doing. We're trending down, creating like little channels. And what's happening is we're building lower time frame structure, right? This is internal structure. So, we can see price build and structure down, right? We start seeing price build structure down and down and down and down. We come through, we tap into our area of interest, and then stuff that we talk about in our premium starts to happen on the lower time frames. A lot of different things will start happening in the lower time frames. And then eventually you start getting more entry opportunities, some breaks of structure, and then even more optimal entry areas. Because remember, on the higher time frame, we were looking at this range here. Let me put this back up on this settings. We were looking at this zone. This was our area of interest. This is what we were looking at. And then obviously price spiked through. and then we're at the live market conditions. We want to see this thing swing from the entry that we actually caught. We caught an entry down here, price is floating, and there's some challenges now of breaking through this zone, but things are looking good. There's some equal highs here. Price could potentially move really good. We got a few entries when it comes down to gold. We have some positions in regards to it right now, scaling in, so on and so forth. But overall, we're just trying to see what's going to happen. But trades are looking good. In the Discord, really quick, here was a setup. This was the zone we had. Price hit in regards to it. A lot of people are in some of the trades. I'm only talking about gold. We took 3 trades, AU, GU, and XAU USD. Team is literally killing it left and right. People are loving the premium. They're absolutely crushing it. Just focus in, take the trades, look at the results. You feel me? So at the end of the day, it's exciting stuff. We're just really genuinely trying to build a community of people who are learning first and foremost, getting some help on the way, following along with what we're doing in the community. I'm giving out ideas in the trades that I'm actually actively looking at and taking and participating. The community can see how I trade and see what I'm doing. And alongside, they're going through the unreleased course and they've been learning, right? And the biggest thing is they're learning on their own as well. We're having fun. We're winning. At the end of the day, I feel like that's really what it's all about. In regards to it, coming back to the charts, this gold, we took trades on, I'm going to break them down really quickly. But we took trades on AUD USD. Same thing. Let's focus back in on the fib because that's what this video is about. Take the fib from the high to the low. We come into this deep area of retracement. We find our institutional levels. We see the fib isn't a confluence where we enter just blindly just off the fib, but we take what it shows us. We build a narrative, we build a zone, we build something that we like, and then we just swing with our rules, or we trade the lower time frame with our rules. So right now, this is a trade that's up 41 pips. It was up probably a little bit more, maybe 50 or so. And then same thing with GBP USD. Once again, fib high to low in the sense of structure, right? We got the start of our move. Whoops. We have the start of our move. We have the end of our move. We have a straight on move up. And then we have a deep retracement pull back. We go ahead and we pull into this specific candle, kind of channeling down, which is okay. And maybe we have one more spike down, who knows? But overall, we want to see this thing go up. Right now, we have some good entries down here. We're holding, we're seeing what's going on with this idea. But in regards to it, trading with the fib is very simple. I'm showing you like live analysis, live trading of current prices. But even going back to previous areas, I mean, if you fib high to low here, this one didn't make it to the 61.8 area, which is fine. Just let's look for a different market that might be trending a little bit differently. Fib high to low, come into our zone. And then you can set a target at that area right there, that weak low, TP here, right? Just the key thing is always structure. Okay, structure's up on the bigger time frame. Structure looks like this on the medium time frame. So we understand on the higher time frame, structure is looking like this from these lows to this high. On the medium time frame, we understand price is looking like this. We see price makes this move here. This black move, it breaks the structure, right? It breaks the structure here. And then we start what we like to say is a downtrend. And even though we didn't have a huge continuation, then we had another reversal back to the upside. What I want you guys to understand is regardless of any of that, the fib is just a good tool to understand that when you're in a trending market, if you take the fib from the high to the low of any specific market, it's going to give you an area of where price could potentially pull back to, and you could look to take it in that direction, right? So just trading with the trend is a big thing when it comes to the fib, and then adding multiple confluences. And it's something that will really help you along the way. And it's not a single confluence which you should use to trade on your own. Like trading with the Fib, it should be added with multiple different things. Key thing about trading is once you have an area that you're interested in, you want to just keep adding confluences, adding confirmations on why that trade should work out. So with that being said, guys, the Fib is a very resourceful tool, something that's helped me a lot over the course of the years. It's something that you'll eventually be able to just visually see without even having to throw the Fib on it. But understanding Fibonacci in the market is key. Fibonacci in real life is just a sequence of golden ratio, 61.8, things that nature. There's a lot we can do. I'll drop this video for now, but just a simple Fib strategy, but I'll do an in-depth training later down the line of our YouTube channel. With that being said, guys, if you're enjoying the content, feel free to join our Discord. The free community is lit. We're trading the live sessions during London and sometimes New York. And then on top of that, we have the premium community where we have fun, we grow, we learn, we do some one-on-one type of trading. And on top of that, we all eat, right? What's better than eating as a family, as a group, as a community? But if you guys are liking these YouTube videos, man, subscribe, like the video, leave a comment, tag the homies, whatever. And I hope just as much as we're enjoying making the content for you, I hope you guys enjoy and appreciate the content. And just know that we're going to keep it coming. And it's going to be more frequent, more fire. We're going to get better at it. And we're going to see you guys from the top and take it easy.